Good morning, everybody. Hey, welcome to Wednesday, October 2nd. Hope you're having a great day and is off to a great start. And Dave will be with us in just a moment, but do want to remind you about some of the things we've got going on. We're going to be doing a lunch and learn and an afternoon work and learn coming up this next week, next Thursday. You can call our office at 382-0037 if you'd like to get registered for that. So that's 382-0037 to register for our lunch and learn or after work and learn, where we're going to be talking about market conditions and things we need to look out for in retirement. So hang tight. Dave will be with us in just a moment.
05.7 Light FM. Bonnie Raitt is there. Hello there. We're at 8:40 now. It's 20 before 9. Time to check in on your money and see what Wall Street's doing this morning. Not a pretty day yesterday. The Dow was down by 344 points yesterday afternoon. Let's see if we got any chance of recovering. Downtown Sebring, we head to the offices of Statler Financial Services, where Phillip Statler's standing by. And Phillip, boy, oh boy, does a data point or two cause a panic all at once, doesn't it?
Well, it definitely took the winds out of the sails yesterday, Dave, when, after you and I got off the radio, then some other economic news started to post. We had construction spending and manufacturing numbers come out. Both of them were a miss. Construction spending came in at 0.1% increase, which was 0.3 less than expected. They expected to come in at 0.4. Doesn't sound like a big miss, but it just is an indication of things slowing down again. And then you add into that, Dave, the manufacturing number, and it missed also, not significantly, but still slowing down. And that's what you and I have been talking about for a while.
Absolutely. It just kind of confirms the data point figures that we've been talking about for some time, that the economy is still growing. We are not in a recession yet, but we're definitely slowing down. And as I keep saying, we keep hoping for a soft landing. Net result, though, and most of the loss was after those two reports came out midday yesterday. Dow was off by a full 1.25%, down 344 points, and NASDAQ was down by over 1%, down about 90.6, and the Standard & Poor's about 1.25%, down by about 36.5 points. It was an undisputable bad day on Wall Street off of what would normally, in a less testy time for investors, be considered an off month, and that would be about it. Shrug your shoulders and go on, but we're just kind of watching for any sign of softness, aren't we?
Yeah, we are. And so that gives me the next thing. We don't have this number yet. It'll come out sometime this morning, and that's going to be the total vehicle sales. I'm interested to see, after what we saw yesterday, what those numbers come in at, and those won't come in until a little later this morning.
And it's been no big secret that it's been a little soft in the automotive industry this year. So a good number would do a lot of good to turn morale around, wouldn't it?
Yeah, it really would. And the opposite, right? If it misses significantly, then it will kind of heap on to what we're seeing already.
Absolutely. We talked about Ford giving some guidance yesterday, saying they were going to have a big expense from a merger they're working on. General Motors' strike continues. They really could use some good news. Just to add to the pain on the manufacturing and construction numbers that we had yesterday, Germany comes out with some projection reports this morning saying they expect their manufacturing numbers to continue to decline over there. Doesn't affect us directly over here, but a major trading partner hitting a soft spot doesn't help our morale a bit either.
No, and I don't think that really should be unexpected, given that we've seen such a slowdown in Europe already. That's just an indication of what we're already seeing, and as it continues to decline.
Yeah, I'm kind of seeing it as nothing more than confirmation, but it's confirmation we just didn't need
That's
today.
True. You're right. You're absolutely right.
The monthly employment reports are starting to flood in. ADP, the big private payroll service, reported 135,000 jobs created in the private sector last month. But whoops, August they changed their mind on, and it doesn't look half as good, does it?
No, absolutely not. August was a quote big gain, and now they revised it from 195,000 down to 157,000. which would have been in line had they made that adjustment in August when people were
I was,
expecting it. So
I was going to say that was about what we were expecting, right?
exactly. And so by revising that lower, that is going to weigh today on on our employment numbers. And then we've got the numbers for today came out at 135,000. And depending upon who you look at, it was expected to come in at 140 to 145,000. So we've got a miss there also. And then to add fuel to the fire, it's a significantly less than what we had last year, same month. Last year, same month of September, we added 214,000 jobs.
I was wondering how that compares year over year because I hadn't seen those numbers. But once again, we're looking at what would normally be called a modest-sized miss, not enough to really scare the bejeebers out of the market, but you put it together with a whole bunch of data point disappointments, and we're not looking at a happy morning this morning, even after a bad day yesterday, are we?
No, we're really not. And one little tidbit I saw was if the jobs continue this lack of momentum, that we'll start to see an increase in the unemployment rate.
That's something we don't need to hear in advance of Friday's official release by any measure. I noticed one of the reactions in the market, yields on the bonds are going down again. The federal 10-year bond down by 4 basis points this morning. That's generally considered an indication that the smart money is running to stability for a couple of days while they try to figure out what the Sam Hill's going on.
Yeah, you're right. It is. That's when the bond yield starts going down, everybody's flight to safety, right? So, we talked about construction spending. You and I didn't talk about this before, but I saw this headline I thought interesting. The New York City, Manhattan home prices down 8% in third quarter, the largest slump since 2011.
That sounds like the beginning. Well, if we weren't talking about an overpriced plot of land to begin with, that would sound like really bad news.
Yeah, and so we'll definitely want to keep an eye on those type of prices in those big metropolitan areas.
Absolutely, because they tend to drive the economy even when we don't live there. The construction spending yesterday caught my eye partially because one of the two company reports that we got out this morning is one of the big home builders. And Lennar, evidently, at least for the last quarter, kind of said, what recession, right?
Well, they did do well. They beat significantly by over 25 cents a share, and so that was good. Their revenue was ahead of what Wall Street had forecasted. Their new orders rose 9% from a year ago, and so good things there. But they're trading up this morning by it's getting close to 3% now, Dave. Up $1.60 a share, 2.9%.
What did Lennar say about guidance? Did you see anything on that release? What are they saying about it?
Lennar didn't give any guidance. The only thing they really said is that the volume's up 9%, but revenue's only up 3% on that 9% increase.
Which kind of means they're discounting a little bit to keep the volume going, right?
Yeah, that's what it seems like.
All right. The other side of that coin is something we probably have all gotten junk email about, and it's kind of a growth industry, the Stitch Fix. I can't even say it. Stitch Fix. There we go.
That's right. They fix your stitches. Yeah, they're the clothing company that they call themselves a style company. They send out styles to folks on a kind of a subscription basis. They did beat the street though. They came in at 7 cents a share, 4 cents ahead of what was expected. Revenue matched what everybody thought they would do, which was good. However, they missed on current quarter forecasts. So they're saying that the summer season is lasting longer than expected, and summer clothes have a lower retail price tag than fall clothes, and so they expect lower revenue in the fourth quarter, and that's really dragging Stitch Fix down significantly. Now they're down 14.5% this morning.
Good God. I never even considered that summer clothing was cheaper than winter clothing, but I suppose up north, tweed sport coat costs a heck of a lot more than a cheap cotton one, right?
Well, that's right. And as it stays warmer, I had this conversation yesterday with the client. They're getting ready to go see the leaves change up north in North Carolina. I thought, well, it's been awful hot. Are they really going to be changing yet? Because that affects that season. So it's still hot up there.
Understood. I learn something new about businesses every time we see these company reports come out. Resetting the table for the morning, like I said, red ink yesterday, and a heck of a lot of it. Dow was down by 343, NASDAQ down by 90.5, Standard & Poor's was down by 36.5, and it doesn't sound like we got a lot of good news this morning, Philip. 45 minutes early. Where are we going?
So we're going to continue from yesterday, not as bad, at least right now, but still down. The Dow's down about 0.5%. The S&P 500 is down 0.5%, and the NASDAQ's down about 0.6%. We're seeing the flip side on gold, silver, and oil. They're all heading up by really about the same percentage. Their gold's up about 0.4. Silver's up almost 0.4, and crude oil's up about 0.4. Crude oil right now is, but it's lower from when you and I talked yesterday, Dave. It's down
I noticed that, yeah.
It's down to $53.82. So it had a down day yesterday.
And we'll take that happily down the line. Overseas markets, Asia kind of got a case of the flu that we got yesterday. Asian rim markets generally off overnight. Europe is kind of sort of off as well. They got a major sell-off going over in Great Britain. Germany is down fractionally midway through their trading day today. Phillip, advice always needed to stabilize. It doesn't take a lot to scare the markets. We kind of saw that yesterday. How do I get a hold of you to stabilize my retirement fund?
Devin, give us a call at 382-0037 to schedule a free x-ray report where we kind of tell them how much risk exposure they have in their current portfolio versus their actual risk number. Hey, the other thing I have coming up the next week on Thursday, we are doing a lunch and learn and an after work and learn. This next week, we're going to talk about things that could cause you to run out of money in retirement. And they can call 382-0037 to register for that. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on your sister station, News Talk 730 a.m.
Important stuff, like you say over and over again. There are no redos on retirement decisions, right?
You're absolutely right. It's a one and done.
I got you. Thank you so much, and we'll catch you in the morning, Phillip. You have a good day.
All right, you too.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Of all the questions.
Well, as we talked about today, the markets are looking a little south as we prepare for this morning, and they kind of continue to head that way, even more so than when Dave and I were speaking a minute ago. But I do want to remind you again, we have our Lunch and Learn coming up Thursday, October 9th. We're going to do a noon Lunch and Learn, and we're going to do an after work and learn. Call our office at 382-0037 to register. Do it right now. I think you'll find it very informative, very interesting on things that can cause you to run out of money in retirement. Have a great day. I look forward to speaking to you again tomorrow.